Good afternoon. It is Taco Tuesday with the markets with DJ Easy Pips on the mic. What's going on, guys? What's going on?
Doing pretty good.
Awesome, awesome, awesome. Just want to knock out the what's it called? Joshua Hughes. My goodness. It's been a minute. How have you been, man? It's good to have you. Wells, it's good to have you. D, it's good to have you. Who else is here? Who else is here? We got Waiweru. We got Rich. We
I'm
got
here too.
Woo! we got Puma in the building. Wow.
Bianca's here too.
Bianca's here. Oh man. Okay, we have a full house. Who else we have here?
I'm here. I'm sorry.
Yeah, man. What's up?
I'm good, thanks. How are you?
I'm doing good, man. I be seeing you watching in the background and just waiting for you to, take it back seriously again, man. I'm just waiting.
Good.
I got Vaughn in the building. I got Alicia in the building. We got Stefan in the building. What's up? What's up? What's up? Don't
Hello,
hide too long.
everyone.
Yeah, yeah, yeah. Don't hide for too long now. The year's almost over. So let's get straight into business. Number one, happy September. It is a brand new month. And oh no. And damn, why would that John do it like that? Hold on. I got a tab that's not supposed to be showing. This contract agreement. This ain't none of y'all business. Hold on. Okay. Okay. So yeah, like I was saying, uh, it's been a good new month. We were waiting for this because it's a lot of great setups and a lot of good money to be made in September. But it has come to my attention that even though we've been talking about it, you guys aren't quite ready mentally yet. And I need to snap that into your mind that we are in September. We are in September. We are in September. We are in September. And we've been talking about September as a profitable month because we have the sauce. We understand what September does in these markets. What have I been saying about September, guys? What have I been saying about September? Some of y'all ain't been in a loop, so you're not going to know.
It's a red month.
It's a red month. Who said that?
Vaughn.
Yes, sir. Vaughn knows. It's a red month. You've been watching. You saw the video. Why do you guys think September is a red month? Anybody?
Does it have anything to do with like the fiscal quarters and the banks?
Yes, it has everything to do with the banks and the fiscal quarter because this is around the time where they're pulling the slingshot back. If you guys understand where I'm coming from. Okay, they're closing out some profits for their clients. They're shifting certain things. What else do we have going on this month? September 18th.
Elections and stuff.
We got elections this year in November, yes. But September 18th is what? Come on now.
Rate cut, rate cut.
Yes, rate cuts. Rate cuts. FOMC. All of this is letting us know that September is more than likely to stay up with what's usual in the markets because historically September is a bearish correction. It's not going to crash. And if it does, then that's good news for us because then it'll give us opportunities like never before, right? If the market, for example, do you notice how like in May 2024, the market pulled back like this, like this, like this, like this until the end of June? So it could buy in July? Well, these things typically happen, right? That's why, like, already with US 30, yesterday was a holiday, but we noticed that there was not too much volume. However, as I teach you guys, you don't need to do too much analysis. All you have to do is look at the previous week, at least from Thursday, Friday. Thursday, August 29th, Friday, August 30th. Monday, they couldn't even break past Thursday. And then price started doing what? Break and retest, break and retest, break and retest, a sweep of London. And then so obviously we saw the reasons why the Dow Jones US 30 was already showing us bearish setups. So for those of you guys who've been used to catching bullish setups, now you're going to have to shift your strategies, shift your eyes and comfort levels, because this is why I speak on this word that I coined right here. And you guys already know how you're going to finish this statement, because we've been learning to be visually what?
Ambidextrous.
Ambidextrous. That's right. Do you guys know the prefix ambi? Do you know what ambi means?
Is it both, I believe?
That's right. Who took medical terminology classes?
I mean, somewhat.
Right. So when you see ambiguous, ambient, all right, all that, it means both. All right. It means multiple, including. All right. So ambidextrous, dexterous means fingers, dexterity. Okay. So the words don't just go unnoticed. So this is why I said we have to be visually ambidextrous, because some of us don't do too well in bearish markets, or you're not too sure if you should be catching buys or sells, when really, I said this before, some setups that you see in the markets are better as like exits than entries, or they're better entries than you trying to catch a counter trade that is not too good of a setup. Some of y'all be trying to catch everything that moves. If you see it move one way, you want to catch it this way. If you move it that way, you want to catch it this way. The problem is you don't know where your exits are at in certain setups. And so they're catching you with your pants down when you were supposed to close the profit. Oh, no, I'm going to let it get to this number. You have no trading plan. You're just going with the flow of movement. No, absolutely no. Absolutely not. That's why when I'm having conversations with many of you and you're like, oh, I want to get in right now. I'm like, why? What's your exit? Do you want to take accountability for that trade if it goes whichever way? Sometimes you got to really look at trades just like you look at life. Are you ready to take on the responsibility of that decision, that risk that you're taking? How is it going to play out for you? Is it high quality? Yes or no? Why are we taking this trade? Will it make a certain type of profit for us to have enough money for the next trade? You know what I'm saying? Like, where's your mind at when you're trading? Is it because you want to feel right? Do you want to feel validated? Is that trade going to guarantee some profits, or does it guarantee you more of a loss? Because we have to play the probabilities. Parentheses close. So since I've been telling you guys this, and there's a lot of data backing what I'm saying, September is naturally a bearish correction type of month. So that way, end of October, beginning of November can be a very bullish month. I've back tested this. I've peeped that there's very good logic and data behind this, and it makes sense. So this is why in the beginning of the month already, I was trying to figure out like how are they going to do this. And sure enough, today I noticed that price went and did this. It broke structure, pulled back within the London session, London session hours in London. I mean in New York. And so by 9:30, 9:45, they was already selling. But if you drop down to the 3 and the 5 minute time frame, you can see that even by 9:45, they pulled back by 10 and they still retraced. And these are typically the setups you'll be able to catch this month. A lot of times you might want to just wait for price to retrace back so you can catch the sell when they pull back within retracement areas. Does that make sense?
It
Your
does.
your best entries are going to be lower highs. Okay. Retest of the previous day's supplies. Areas like that will help you to catch a good trade. There's
I've
no
noticed bearish trends don't typically break lower highs a whole lot.
exactly. So these are the tendencies that uphold good quality trades. Don't try and fight anything, because if the market is going to give you a new high, they need to find a nice base, a foundation for it to bounce off of. Now, peep this for those people who don't usually take a look at higher time frames because they are scalpers. When you're looking at the 4-hour time frame, it's just like when you are building a house and you set the foundation, the basement, for those of us who have lived up north, or the level of the house where the cinder blocks are going to start preparing to build from the ground up. And US 30, for example, is a pair like that. They're never going to give you a beautiful new higher high unless they pull back deep within a demand. And sometimes demands from different months. Okay. So notice how when the market retraced in April, in May, in the beginning of May, they retraced into a daily demand from January. And from January, they came back into this demand. They rejected it and they bought for like 20 to 30 days, aka about 3 weeks. So you remember, I tell you guys there's power in price bouncing off an area twice. Notice how it took 2 days or 2 bounces for you not to be second guessing. So is it going to buy? When is it going to buy? I'm wondering how it's going to buy.
Please, yep.
Notice patterns. Somebody's in here. Please mute yourself. If your background is noisy, please mute yourself. This call is recorded for quality assurance purposes. So notice these patterns if you've never taken your time to know how to backtest. When price is ready to buy, notice it bounces off an area twice on 2 separate days. And then it buys. And then it rips. So for you to get ready and prepare for things like that, you need to notice the patterns of the similar behavior that it does. Notice how in June, price bounces off of this demand on 2 separate days. More than 2 separate days, but you can tell the bounce happened in June. And then they came here in the middle of June, off of the end of May and the beginning of June, bounced twice, and it was out of there. 10 days, 15, 28, 30 days, they're out of there. But this was a retracement off of a sell. And then after they were done selling, they used 2 separate days to bounce off the area to take off. Are you guys understanding why I'm making this emphasis? Do you guys understand why I'm making this emphasis on the repeated behaviors that happen? Before I explain to you why, can you guys guess why I'm trying to make sure you guys understand the behaviors? rinse and repeat. Because sometimes I want to make sure you guys understand the why. People talk to y'all all the time, but you've missed the point. The point is, a lot of guesswork that you guys are doing is because, one, you haven't seen things long enough than I have. I get that part. Number two, you don't trust that what you're seeing is going to repeat because you don't have enough screenshots and notations, because you're just learning to take your journal game to a whole nother level, or you don't journal at all. You think your memory can handle everything that it has seen before. And number three, you haven't connected the dots yet to see, like, when Price, or just like a friend of yours or a sibling of yours, they have these little quirks that they do. For example, if you have kids, you know, like, if they want something, you can tell the kid always usually does something before it asks. Or if you have a pet, you know your pet has a special way it scratches the door if it's trying to tell you it wants to go pee. Or if you have a wife, there's a certain way she likes to start off the day when she wants you to spoil her. If you have a significant other, whatever, you get the point. So the market is just like that as well. When it wants to buy, it likes to retrace deep, retest at least 2 days, and then it buys. So this is why some months like September are very important for them to pull back like a slingshot, preparing for the rest of the year. Does that make sense?
It does.
You got to understand the bigger picture. This algorithm was made by humans. So of course, it has correlations of human tendencies. I repeat, this algorithm was made by humans. So of course, it has relations and correlations with human tendencies. All right. So this is why, like, the market's not going to leave you, or you're not missing nothing thinking it's going to buy and you totally missed it. There are cues that the market does when it wants to buy. Sometimes it's very difficult to see. Like on the 28th of August, all it did was tap into that demand from last Friday, a few Wednesdays ago, and then they pushed, and then the next day you couldn't even catch it, right? Okay, stuff like that happens, but that doesn't mean you totally miss the trade or you totally miss your opportunity, and now you're going to settle for the worst trades and messing up your account. And who's going to have to play catch up? You. So why are you self-sabotaging? Wait for the better setups. Only if you could just wait for those setups. But no, the dopamine is itching. Your trigger finger is itching. Like, it's cool to let the bullet go, but who's going to be responsible for all that? Who's going to be responsible for picking up all these dead bodies? You. Unless you like that type of job. Earlier today, I received a message, so I had to pick out my batch of text messages to respond to. But the one that stood out to me the most was the one that was like, yo, bro, I need you to pep talk me to like help me with over trading. And I said, give me 5 good reasons why over trading benefited you in the past. And do you know what the beautiful answer was? None. So I asked you guys this question. When has over trading helped you in your trading career? Don't worry, I'll wait.
Never.
Oh, yeah?
It never did.
Oh, word?
took me out after I tripled an account.
Hmm. Shocker. So, what are we doing here, guys? Are we just going to answer these questions for what it is, or are we going to stop repeating these patterns and making peace with the fact that why do we self-sabotage? Do we make self-sabotaging decisions not just in trading, but in a lot of our personal lives too? Maybe. The cycle is not just with trading. So we have to dig deep. What is it that makes me do these things that I know don't help me? You will find a reason, but does the reason warrant growth? Or does it just keep having you take 3 steps back? Because in trading, it's okay to take a step back, to rest. It's okay to lose a few trades. But that's supposed to tell you, warning, warning, hey, you took a few losses, but just know you can't make them back unless it's a good setup, or else you're just going to keep spiraling. You should challenge your mind to be like, okay, so what does that setup look like? For me, the answer became simple. I'm like, I need to find something simple, easy to trade, so I can get back into my flow. It just so happens the break and retest always repeats. So I'm like, okay, if I take a loss, I'm just going to wait for price to break structure, retrace, and therefore I will be expecting it to continue whatever direction it was heading. So then I'll benefit from that. So even if I lose, that just means, hey, slow down, bro. You thought this was going to play out. It didn't. It's cool. Let's just wait for them to give us the setups that play out better. Then you can increase your lot size or your risk to make a little bit more, maybe to catch back up, or just to boost the account a little bit more. You don't just settle for any setups in hopes that you're going to make a recovery. You don't take random medication in hopes that you're going to feel better, right? So why would that work with trading? Do you just go and take out oxycodone when you have a cold? No. So why would that heal your account? It doesn't make sense. Anyways, this month is going to be a very profitable month if you allow yourself to wait for the market to buy back up to the retracement areas where it is best to place a trade, because you're going to have a good zone to put your stop loss and a great risk to reward as it continues back down to return to areas of demand that it respected or it visited in the past. Okay, so this is why, like, even with gold today, we noticed that last week gold was having a big issue trying to get to anywhere above 25, 45, 50, or anything else that even I was anticipating. But by Friday, I can tell that, you know what? If price can't even make it past the previous high of the week, I don't even much need to entertain this grand hope that is going to go towards 24, any 25, 40, or anything higher than that. And I need you guys to understand what I just said here. If you are looking for a higher high, you have to wait for price to make a higher low. There's no higher high without a higher low. It sounds simple, but yo, there's no higher high without a higher low. So that whatever buy you're looking for to make a new high has to happen with a higher low. Price, the market has more principles than you do. That's usually the problem. If it does something random, you cannot go off of the laws of randomness. You will only be profitable in a long run when you can identify things that repeat so you can catch on. But the things that are like one-off-ish, you just put that in a pile of like, yo, that was random. I can't I can't really make a strategy out of randomness. You can only make a good strategy of profitability and consistency off of something that repeats more often that you can identify. Get it?
Got it.
Cool. So, with this market right now, tomorrow there's more news. And that type of news will more than likely help a pair like GU, a pair like EU, a pair like gold, a pair like Euro, a pair like US 30 to pull back more into the demand side, heading back down to demand, right? Reason why. Tomorrow we have Jolt's job opening. They're gonna make it seem like either price or not price, but the numbers come out positive for the dollar. Uh we looked good for July. We look good for July 30th. I doubt that the job openings report is going to come out negative, right? So it's more than likely going to come out positive. Just like today, the ISM manufacturing prices and PMI came out pretty okay. So we saw that this, why traders scared? It's a leading indicator of consumer inflation. When business pays more for goods and services, the higher costs are usually passed on the consumer, which still makes for a strong dollar, right? So this is very ironic because it's not that the economy is bad, the economy is expensive. And so if we have rate cuts on the 18th of September, it's just that they're trying to make things a little bit less expensive. And so if things are to be made a little bit less expensive for the next 6 months, then that means investors and institutions would bank in on that type of information to pull the market back towards demand to make perhaps a higher low before it makes a higher high by January. You guys get what I'm saying, right? What I'm saying is it would make more sense for them to pull back deep before they push back up. This is why a September usually seems to be a reoccurring theme that it is bearish, not that it's going to crash, but that it's going to correct before buying and going higher. So the objective for September is we're going to be looking for more bearish setups on the internal structures. So that's why we're seeing a Euro USD, for example, when price bought here, they bought two supply zones so they can sell. They're not bullish. They're buying two supply zones so they can sell. So you got to wait on these bearish setups by catching them at supply retracement zones. Or if they sweep London and New York, that's when you get in those sells. At 10, news came out. They pushed it a little higher, but they pushed it towards London. So this is where you'll get your sniper entry sells. Your stop loss will be above London sweeps. Your TP is more than likely going to just be at short-term demands. Like those will hit more. This is why we see them retracing back to these areas. So tomorrow is going to be a reoccurring theme. We might just see them do the same thing. Buy a little bit so they can sell off from supply zones. The same situation goes with GBP USD. We saw that price bounce, push back into supply, And so from supply is where you will want to take the best sell trades. This thing dropped 50 points in an hour. 50 pips in an hour. Beautiful trade. Beautiful trade. It looks like we still have more potential to the downside. So we would have to wait for a retracement or something like that so it can keep selling. So a pair like UJ though, we should expect it to pull into demand to buy because now the US dollar is a bit on the bullish side. And GJ, even though it sold today, they sold back into demand. And GJ is like a stock, right? Every time GJ sells, it'll find its way into demand so it can buy again. And Nas is gonna be bearish for the moment because it needs to breathe back into demand. And one of the main reasons why Nas is selling right now, we saw that it broke structure, pulled back into the supply zone, and the supply zone is now hard to understand because we have the Thursday to Friday strategy. We have Thursday and Friday as a bookmark area to see if the next week price pulls up and it's still not going past that. So then you have everything you needed to see for you to take the trade. All right. And another thing, NVIDIA, matter of fact, NVIDIA is quite bearish right now, trying to check back into demand zones. Tesla is holding it down, but you can tell it's not as strong. It's not as strong. So if we check Meta just did some buy side liquidity sweep. So all these stocks pretty much are trying to retrace into some type of demand so they can buy maybe into the fourth quarter. Who knows? All I know is this. If you got these main stocks, let me see if Christine is here. Okay. She's not here. If you got these main stocks retracing back into demand, then it makes every sense in the world why NASDAQ is not bullish just yet. Clear?
That's clear.
Okay. So a lot of you guys will make a lot of money in fourth quarter because once we figure out that they've made it to demand, then start thinking about these options calls for the next 60 to 70 days expiration. You will be in the money. So if price sells off, don't let all these crazy news media outlets get you panicking that we are, oh, things are going to be bad. No, America runs on Duncan, and America can never afford one day off, or else everything will just go to shit. So that's why, like, if we ever see stocks drop crazy, the feds are going to have to step in and inject money. They will never let their companies look bad. They're always going to reinvest and print money just to keep this show from hitting the fan. So that's why, like, never use the word crash. Always see it as a deep correction. Okay? Trust me, they've been here for years. They will be here for the next centuries. And these guys get first dib information on the future, AI, and all kinds of stuff that they haven't even told us yet. So why do you think this thing? It's just this infatuation of thinking everything's just going to come crashing down. It's the end of the world as we know it. It's not true. So when you're trading as a trader or investor, avoid absolute thoughts of negativity. It doesn't work that way. Only you. Because these guys are looking, they're looking at the next 200 years, how they can take over your mind, your life, and their legacies. They're not going to let their legacy go to shit. Trust me. These guys are elites, and this is where their money is at. So why would they let their money go to shit? These guys want to be trillionaires and not let you know about it. And this is the market they use to be trillionaires and to pass on their life insurance policies to the next heir of their throne. Why would they let the market crash to its knees and never recover? Get that out your head. So this is why this market is a market of abundance. Does that make sense, guys?
Yes, it makes complete sense. Thank you.
The rich will stay rich. So start thinking like that. Start thinking like that. If the rich will stay rich, then that means this market that makes them rich will stay rich as well. So stop blowing accounts on a 2-day bad streak and you ready to crash out. That's poverty mindset. If you can't have it now, you can't have nothing at all. What? That's crazy talk. So this is why this week is going to be a really good week. We just got to wait on these setups. All right. So tomorrow, be prepared to start looking at your markets at least by like 8, 9. Give yourself an hour or so just to, be prepared for these setups. Like, for example, I took a sell trade on gold today. I actually was having trouble sleeping, so um I was able to like catch this trade think by like 5 in the morning. Yeah. And all the reason why I took it is because, market does the same thing everywhere. They'll like when they can't sell, they buy back into supply just so they can sell some more. So now I was waiting to see if Tuesday was going to connect with Monday, and it did. So then I caught it from here. My TP was like, matter of fact, my TP was like 2503 or something like that. I don't remember. Oh, no, 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 no. I got in at like, hold on. Let me see. Okay, 2504. I got out at 2493. Okay, that was the only trade I took. And so, by New York, I saw that they were kind of like retesting this area, and then they sold even more to 2475. That trade, I didn't, I didn't get to benefit off of it. But as we can see, price literally just bought back towards the supply again, and I wouldn't be surprised if they're just preparing it for tomorrow to sell again. And I would love it.
Retest.
Yeah, 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 yeah. That's right. Okay. So, and that's pretty much the same way I'm waiting for US 30 as well. I'm waiting for them to retest today's price action tomorrow, just so I can pretty much decide my entry. And I keep it just as simple as I'm breaking it down to you. So questions, comments, concerns?
I had a question about the pound yen for that Friday to Tuesday.
Okay.
When I was looking at the 1 hour, I noticed it on Monday it went above Friday's close, but on Tuesday it came back to that zone and it didn't break that lower higher, that retrace that it did in that zone, and it kept on selling. I just didn't know if that was like part of the sell model or the buy model.
Yeah. How I see it is, of course, it's unfair because I'm looking at it in hindsight, right? But the thing is, on Monday, they couldn't really break past Monday's high in Asia. And so we noticed that um during Asia, they just kept selling. And this morning, they pretty much retested London and sold off some more. A lot of times, you guys are failing to notice that a lot of the retracements happen to retest London and New York so they can sell, or they retest London. Um, or sometimes you notice on Monday, price retests Friday's bounce and then they go. You see that? Friday, Monday. So the demands are not coincidental. Neither are the supply zones because they're passing hands. They're passing hands. So since we know GJ now retraced back into a demand zone like this, we hope that the area will retest here and respect. Because what if it sells even more towards 189.73? We can only find out two ways. Your stop loss gets hit off this buy, or we wait for them to bounce twice in two separate days, or we can see a break and retest off that, and then we can catch those buys. Because right now, it looks like we still could sell off a little bit deeper into this demand instead. Unless we see later on in Asia or London that price uses this area and they bounce off of it, just like they did here. Break structure, pull back in, come back here again, and then they buy. So if they keep flirting around with this area, then we'll know, okay, we can take the trade. But if they sell off here again, and then or they sweep that low and break retest, then we could take that buy. So it's up to them. Just gotta wait. Just gotta wait. Okay, I'm getting a call. Who is it? Okay. So that's that's my outlook on the markets. Same thing with UJ. I think I said that. UJ might be a really clean buy tomorrow. When that 10 o'clock news hits, you might see a nice, 15, 20-minute push, and then price will, retrace or, uh cover all that crazy bullish move, and then by 11:30 they just might continue that direction for the rest of the day. So if you guys just are traders who like to trade bullish setups, I think UJ will give you what you need. It'll give you a lot of good trades because UJ been pushing lately. So let's see what happens. um let's see if there's more news this week. Yeah, we have a little bit more news. Non-farm employment change. Oh, we got unemployment claims, of course, every Thursday we do. Claims. How do we do? We did 27. We did 231 just to show that there's okay. So and the Department of Unemployment Claims, like in the category of unemployment claims, what this is saying is like, if the numbers come out less than what's forecasted, then that means supposedly it's more people getting hired than people who are unemployed. So they were saying there's about 200 and when they say 232K, they mean like 232 million. So last time, August 29th, when unemployment claims came out, people who are claiming to be unemployed, they saying they were anticipating 232K, but instead it's about 1,000 less. So that means, oh, okay, we're not doing too bad. You know, we thought it would be worse, but we're doing not too bad. The same way, August 22nd, it was like, okay, it was even. Then August 15th, they were anticipating 236. It's like, no, it's actually a lot less. So every time the numbers come out less for unemployment claims than what was anticipated, it's supposedly a good look for the dollar. So I'm anticipating this to kind of be more or less even. So that doesn't make much of a change for what the strength of the dollar is, because if there's more people who are employed, that means folks are out here spending their good hard-earned money into the economy. You get it? And this Friday, we have NFP Friday because it's the first Friday of the month. And then the unemployment rate might come out being positive, because if unemployment claims come out as a positive look, then NFP will also be a positive look because it has direct correlation with what is claimed and what the rate is. So unemployment rate might come out hopefully positive. Then that would be like, okay, um, there's more people who are there's less people who are unemployed if it comes out positive. But if it comes out red, that means the percentage rate of people who are unemployed are a lot more this month than it was last month. That's what this is saying. That's why, like, if on April 5th, they were forecasting 3.9% of the people who in the rate of unemployment, they're like, no, it's 3.8. It's kind of like when you step on the scale, you was expecting to weigh 220, and then you check in and it's like, oh, I'm 215. Okay. We're down 5 pounds. Okay, we doing good. We ain't doing too bad. We ain't doing too bad. That's what the unemployment rate is like. Okay, guys? So for those of y'all who swear fundamentals is that difficult, it's not always that difficult. Step on the scale, you thought 220. Oh, hey, 218. All right, okay. You just not drink too much of that iced coffee this week. We'll be all right. That's how this economy is like. Okay, so all this means, if the dollar is still bullish, like it is, a a good unemployment uh number kind of makes us feel like, oh yeah, we're not doing too bad. So that's why, like, when interest rate news comes out, a lot of people are going to be confused if they see that price sells off, because they're going to be like, wait, isn't the economy doing good? Why is it that investors are tanking this market? They're gonna try and confuse you. But really, every September, typically price does a selling off so that they can buy it later. Okay, this is why I've been showing you guys my analysis. Look what happened in 2022. Second week of September, market tanked until the end of the month. All right. Look what happened in 2023. Second week of September, the market sold until the end of the month. Oh, okay. Look what happened. Look what happened in 2021. Second week, shoot, not even the second, the first week, market was already starting to sell until the end of the month. Look at 2020. In September, market sold until September 25th. Bought in October, pulled back in to retest September, and then they was off in November. Look what happened in 2019. Yeah, it's all there. It's all there. We don't make up shit. Look. So this is why, like, you have to be in tune with what you're trading. Only in 2017, it was like a little off, I believe. Hold on. Why is it here? Why is this here? Yeah. Only in September 2017, the market was more so like bullish since September until January, which was kind of weird. Okay. So this is why when I was anticipating this year's September, I wanted to see if they're in line with what they usually do in September. Got it? Everybody is good. Everybody is clear. Everybody see the reasoning behind a lot of things. Did this webinar cover a lot of confirmation for you? I'm glad it did for like 2 people. Anyways, guys, have a great rest of your day. I will drop the recording. Peace, love, and blessings. I'm about to go have lunch. Bye-bye for now. Oh,
Bye.
All right, thank you.
no problem.
Thanks.